Last year, there were 2.2 million electric vehicles sold around the world, including China, the largest market. We believe that number is going to 40 million in 5 years. And our confidence in all of these platforms and technologies is only growing. And our confidence in Tesla's outlook is only growing. Many commentators out there actually call me Crazy Cathie, and they still do. And they will continue to do so. And I love it. Exponential growth in the early days looks very much like linear growth, especially when you're working from a very low base. And so most of the industry is linear in its thinking, linear growth, that is. We're focused only on exponential growth. If you give us 5 years, the difference between linear and exponential is shocking. And so people say with our Tesla is now at a little bit below $700. Our bear case for it in 5 years, meaning no autonomous, is $1,500.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, Ark Invest's Cathie Wood discusses Tesla, talks innovation, explains why she and Ark Invest believe the electric vehicle market will grow to about half of all new vehicle sales within 5 years. Yeah, let that one sink in. And Cathie Wood also explains why she believes that Ark Invest ETFs are likely to see a tripling in value over just the next 5 years. So let's get into the video. And by the way, since I know there's a lot of crypto lovers watching and people who like free stuff, it's your lucky day. For a limited time, you can get up to $250 in free crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. It also helps out the channel. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
So crazy, yes, and many commentators out there actually call me Crazy Cathie, and they still do, and they will continue to do so. And I love it. And the reason I love it is there's a lot of disbelief in what we're doing. The stocks we own, if you are using a valuation based on this year or next year, and that's your primary screen, in terms of either introducing stocks to a portfolio or sizing them, you'd never, ever buy our portfolios or most of the stocks in our portfolios.
So in terms of Cathie Wood enjoying being called crazy, loving it, to use her own words, I totally relate here, I understand. Really, I believe what Cathie's getting at is this. If you have a high level of conviction in your investment thesis, you genuinely believe you've done the homework, you're not just, oh yeah, no, you've actually done some thinking and research and analysis and looked into the future and holy balls, you've developed a very high level of conviction in this thesis in terms of investing. And yet the general consensus opinion is that you're crazy. That, my friends, is where the greatest investment opportunities are. And to take a rather relevant, in fact, highly meta example, this very YouTube channel was started primarily because people just weren't seeing what I was saying relating to Tesla, and I couldn't stand it. I was having conversations in real life, getting laughed off Reddit, called an autist. By the way, that's actually true. Shout out to everyone on the spectrum. All sorts of other things people just weren't getting. I'm like, you know what? I can't convince people one-on-one. I can't convince people with a Reddit post or two. I'm just going to put everything I think, know, and believe onto the interwebs. And then when I'm right in the future, I'll have a little bit more credibility for next time I sound completely crazy. That's all part of the master plan of this YouTube channel. You guys will notice if you're regular viewers of the channel, I regularly ask you guys to set reminders to fact check me and come back and check on my predictions in the future. Why? I'm building up that credibility. The more times I'm right, making predictions ahead of time that sounded crazy at the time that turned out to be true, the more credibility I gain. The really crazy thing, however, is that I personally think, despite the fact that Tesla stock has 10x'd and then some since I started this channel, we still have a very long way to go. And quite hilariously, there's a number of so-called experts in the YouTube financial education space, not naming any particular names at this point in time, that today still do not get the opportunity, and it is embarrassing, man. I see these channels, lots of views, and I'm like, are people listening to this? Holy fuck, dude, you're not. Oh my god, like, it kills me. So I'm still continuing to harp on about Tesla, the opportunity, explaining why it can 10x over the next decade or so to around a $6 or so trillion market cap, because once again, I sound crazy, yet in 5 or 10 years time, I'm not going to look so crazy. And I'm putting this on the interwebs to be held accountable. So somebody please set a reminder 2025 and 2030 on this exact video. Come back and check me. For 2030, 2031, call it about 10 years, I'm predicting Tesla approximately 10x's and the worst case, 5x. Worst case, 5x in the next 10 years. Best case, 10x, maybe a little bit more. Please keep me accountable. I want to keep building that credibility. Yes, I'll still be around in a decade or so to cash in on that credibility then.
And so most people don't understand that we have a 5-year time horizon. Exponential growth in the early days looks very much like linear growth, especially when you're working from a very low base. And so most of the industry is linear in its thinking, linear growth, that is. We're focused only on exponential growth. If you give us 5 years, the difference between linear and exponential is shocking. Let me give you an example. Last year, there were 2.2 million electric vehicles sold around the world, including China, the largest market. We believe that number is going to 40 million in 5 years. Now, that's almost a 20-fold increase. Most people do not believe that's possible. And the primary reason they believe that is they've never seen it happen.
Now, this is unquestionably one of the most savage things that Cathie Wood has ever said that you probably didn't even realize was absolutely savage. Let me explain. If your method of reasoning, I should say not reasoning, is to say, well, I've never seen it happen before, so who cares about the facts? So I don't need to think. It never happened before. It definitely can't happen. The end. That is what's known as being a complete fucking moron. I hate to say it so bluntly, but that's actually the way that I see things here, okay? If your first go-to when you're approached with something, a prediction, a claim, etc., is to not actually examine the claim and the prediction and the evidence and all the available information, data, everything to try to understand, does this make sense or not, is it possible or not? If your action instead is to just look around and go, well, yeah, never seen that happen before, so not gonna happen. You are an actual fucking moron, which I think fairly accurately describes a huge number of Wall Street analysts at this point in time, a huge number of people in the mainstream finance media, and a huge number of retail investors. Now, to be clear, I'm not suggesting that people are morons because of what they believe. I mean, I could go down the rabbit hole. Shout out to all the Scientology. I'm not going to start ripping on religions here. We'll say that for another video. I could. But I'm instead suggesting they're morons because of the way they've got to their beliefs. For example, if you actually reason by analogy and go, well, never seen an industry grow that fast. There's no way in hell there's going to be 40 million electric vehicles sold in 2026. You're a moron because you haven't examined any evidence that actually has anything to do with that being a possibility. Instead, you've just looked around for an analogy and not reasoned at all. So, I'm not suggesting because you have differing opinions or beliefs to me that you're a moron. But if you get to those beliefs through moronic means, like not actually thinking at all, then yeah, happy to call you a moron, just to be clear.
When they thought it was happening, tech and telecom bubble, it ended in tears, which is exactly what they expect our portfolios to do. You have to go back to the early 1900s to see this kind of exponential growth and take the auto sector. That's where we saw exponential growth caused by technologically enabled innovation. No one is expecting 40 million. Haircut that by half. We are now seeing some people saying, it might get there, could get there, but nothing like 40. And in the early days, in 2014, the numbers that traditional forecasters were using for EVs in the early 20s were like 250,000. We just did 2.2 million.
If you're a so-called expert and your prediction about the future turns out to be off not by 10, 20, 30, or even 50%, not even 100%, but off by a factor of 10, you miss by 1,000%, that's time that you need to retire, or at the very least, take a good long hard look in the mirror and ask, how on earth was I such a fucking moron? Now again, I'm not hating here, but I'm just trying to illustrate the reason that people are making such massive errors in terms of these predictions is they're reasoning like a moron. They're not looking at the data. They're making assumptions and reasoning by analogy because it's easier. They're not doing the intellectually rigorous work required to actually understand what's going to happen. This is why Cathie Wood and Ark Invest sound absolutely bananas claiming. Because keep in mind, today's automotive market globally is a little under 90 million units. If EVs are around 40 million units in 2026, that means they'll be almost half of the entire new vehicle market. It sounds mad, But Ark Invest and I actually agree in terms of our predictions. Let's have a look at my own projections for Tesla's deliveries in 2026. Here we are looking at my bull case prediction for Tesla deliveries running out to 2031. We can see that in 2026, when Ark Invest is expecting the global electric vehicle market to be about 40 million units, I've got Tesla in the bull case scenario delivering 10.5 million units, basically a 25% global market share, pretty close to where they are today. And in my bear case, I've got Tesla delivering about 9 million electric vehicles in 2026. That would be about 22% of the total electric vehicle market at the time. Let me know your thoughts in the comments below, guys. Do you think that in 2026, Tesla has a possibility of delivering around 10 million vehicles and that the global electric vehicle market at the time will be approximately 40 million vehicles as Cathie Wood and Ark Invest are predicting?
So I think if you give us a 5-year time horizon, and the multiples we attach to companies at year 5 are actually more mature multiples. Their valuations are going to come down dramatically, but their growth rates in terms of earnings are going to be exponential. And I think it's that concept of exponential. If you think about our world, if you think about dividend discount models, you talk about Graham and Dodd, what are you doing? Oh, okay, if you have this exceptional growth, you have it for 2 or 3 years, and then you decay immediately to GDP growth, which, by the way, we think is going to be very low, 2 to 3%, until some of these innovations are get to a level where they start moving the GDP needle. So the multiples we use are really more mature multiples than we think we will actually see at that time. But we want to be conservative.
Imagine that. Crazy Cathie's predictions about the future, anticipated returns, etc., she believes to be conservative. Take some time to let that one sink in.
And so people say with our Tesla is now at a little bit below $700. Our bear case for it in 5 years, meaning no autonomous, is $1,500. So it meets our minimum hurdle rate of return, which is 15% at a compound annual rate. And I know during this correction, we've been in a serious correction for innovation for the last 6 weeks to 2 months. I think we're down 30 some odd percent from peak to, we were down 30 some odd percent peak to trough. What happened because of that correction, if we add up all of our price targets and rates of returns and all that, weighted by position in the portfolio, at the peak, our price target suggested we would have a 15% compound annual rate of return. We're really not comfortable that was where we are. In other words, we had a streak of very good performance, outperformance. After the correction, now the compound annual rate of return that we see is 25%. So instead of delivering a double over 5 years, this is not a promise, by the way, our compliance department would want me to add that quickly. Instead of a double over 5 years, we think we have a triple. And our confidence in all of these platforms and technologies is only growing. And our confidence in Tesla's outlook is only growing.
So Cathie Wood, they're expecting, not guaranteeing, but expecting that the Ark Invest ETFs, there's a bunch of them, Ark Genomics, Ark Robotics, Ark Innovation, blah, 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 blah. Ark Invest expecting that on average, they'll see at least a tripling in value over the next 5 years. I wonder what the S&P 500 returns are going to be over that same period of time.
So it's safe to say you think this is an excellent buying opportunity, particularly for those institutions who have been non-believers in the innovation story.
Yeah, we think they're very short innovation. And the problem with that is that disruptive innovation creates creative destruction. Mm-hmm. We think more than half of the S&P 500 is in harm's way of being thoroughly disrupted, disintermediated. And so if for no other reason, they need a hedge. It's called innovation.
Cathie Wood and Ark Invest all in on the future, heavily invested in disruptive innovation. Meanwhile, the majority of investors out there, the majority of Wall Street analysts, the majority of firms out there, funds, etc., all unfortunately and obliviously walking among and investing in dinosaurs, and they don't even know it. Not going to end well. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like up to $250 in free crypto bonuses with BlockFi, use the link in the description. You can also get 2 free stocks with WeBull and a free stock with Stake, also linked in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.